All right, let's go. Let's see. All right, yeah. Trading. All right. So everybody can see my screen, right? Just let me know that you can. All right. Just let me know you can see my screen. Let's see. Yes. Okay, good stuff. All right. So let's go. We're gonna go back. Let me see if I still have it on my. Yes, I do still have it on the screen. Okay, cool. So this is what we did last week. I'm gonna do a quick recap, as quick as I can, and then we're gonna come forward to this week. All right. So last week we spoke about, it's right here. We spoke about two types of entries. Okay. Let me label this. All right. Spoke about two types of entries. All right. As you guys can see, I leave all of my entries on my chart. All right. So that you know it's real. All right. So I will talk about two types of entries. Number one, that entry being entering off of the order blocks. And then number two, so this is entry model one, where you enter from the order blocks. And then entry model two, you enter from the imbalance, also known as fair value gaps, right? FVG. Okay. So those are the two types of entries. Yeah. Um, and what I mentioned basically was, based on market conditions and so forth, both of them coincide, like both of them has its value. But what I recognize is that entry model two I've been using a lot more recently, and getting a lot more entries into the market as well. All right. So both of them have value. Entry model one doesn't work really and truly without entry model two, right? But entry model two can stand alone. Okay. So recap of all of this, right? So what we mentioned was we do an analysis on the bigger time frames, 1 hour, 4 hour, daily, weekly time frame, and we enter trades from the smaller time frames, which is the 15-minute, 5-minute, 1-minute time frame, right? Now we got two ways that we can enter the market as well. Okay. The one I call it the first one being first to the party, right? Which is a more risky entry. And then the second one is being second to the party, right? This gives you a more solid entry into the market, okay? So, of course, both are valid, all right? Both are valid, just one has more confirmations than the other. So, the second type of entry has more confirmations than being first to the party, right? So basically, what it's saying is that you don't always got to be first. Like when a trade, active reaches a particular area, we don't have to just jump in. We want to also wait for another confirmation to be able to enter that trade. Right. So this is the example that I would have given here. All right. So we use this to explain. Okay. So this right here, remember I said the first one being, right? So we're talking about entry model one. The first one, entry model one, is entering from a order block. What is the order block? A order block is the candle, right, that is created before an engulfing candle. All right. The candle that is created before the engulfing candle. So in a scenario like this, where we have an engulfing candle, this is your engulfing candle. So a candle that completely takes out the candle prior is called an engulfing candle. This candle right here then is said to be your order block, which is basically an institutional candle. Okay. So let me know if everybody understands that. All right. Like I said, I'm recapping. So just need to know that you understand what I'm saying. Okay. This candle right here is your engulfing candle. This candle right here is your order block. Okay. Let me know, AC, in the chat if you are all clear, if you understand what I'm saying. Okay, guess if you don't, of course, just say it lost, right? But okay, good. So it looks like everybody is clear. Let me put this chat over here so I can. Okay, good stuff. All right, cool. So this is your engulfing candle. This is your order block. Now, basically, all right, what we're saying is that the way that we want to enter the market to always reduce the risk is by entering in this area, entering in the extreme, right? And what we mean when we say the extreme is the extreme lows or the extreme highs, the extreme discounted price, right? Or your extreme premium prices. Okay. So if it's a buy, you want to enter in the extreme discounted prices. If it's a sell, you want to enter in your extreme premium prices, right? So if price pushes up like this, we got the market push up like this, boom, our expectation is for price to rebalance itself, right? And trade back into this area right here before we look to enter for buys once again. Okay. So on the bigger, this is the bigger time frame perspective. This is what it will look like. Okay. So we just seeing a move up like this, come back down, boom, enter, and price goes. Okay. So we just seen it from a bigger time frame perspective like this. Now, when we drop, so this, for example, this may be a 4-hour time frame, this may be a 1-hour time frame, etc. Right? But we don't enter trades from this. Okay. So what we did is I give you guys the example of this being a smaller time frame, the same type of setup, but on a smaller time frame perspective. Okay. A smaller time frame perspective. Okay. So one sec. All right. All right. So this pullback here, this is what it will actually look like on a smaller time frame. All right. It's messy. It's choppy. It's like this. All right. It's not just a straight move down. We got ups and downs and so forth in it. Okay. So basically, this is what your entry model 1 would look like. Okay, this is what your entry model 1 will look like, where we're entering from our order block, and this is the entry type 1 as well. Let me just put it back here so you guys understand and know what I'm talking about. Order. This is entry model 1. All right, let's put it here so that we differentiate it clearly. The entry model 1. This is then, of course, entry model 2, right? But down here, this is type 1 and type 2, all right? So we're talking about entry model 1, and we're talking about type 1 as well, okay? So entry model 1 and type 1. So the order blocks and being first to the party, okay? That is what this looked like. That's why we have it labeled 1, okay? So price trades back into the area. When price gets back to your order block, we enter. Okay, that's your first entry model. Okay, it's call it being first to the party. It's like price gets back here, bam, we fill the imbalance, bam, we want to take that trade. Right? That's the first way that you could enter the market. Okay, that's the first way that you could enter the market. Right? Type 2, so we're still on entry model 1, which is via the order block, right? But this now is type 2, where you get a confirmation before you actually enter the market, all right? So what that confirmation would look like is when price trades into that particular area, right? We don't want to just enter at that point. We wait for price to break structure, right? So we wait for a previous high to be taken. All right, we wait for a previous height to be taken. Then when it pulls back, then we enter at this point. So you will see something like this happen where price pushed up, boom, pull back down, bam, and then we take the entry, right, for the buys up, right? So this both are very valid, right? Because if you could have got an entry here from the order block and here, right, still within the order block, but we got more of a confirmation before we actually enter. This is you being second to the party at this point. Okay, so this is type 2, right? All within entry model 1, but this is type 2. This is second type of entry. Let me know if everybody understands that, right? So far. Again, doing a quick recap before we move forward. So let me know if everybody understands that. If you don't, please let me know. Okay. All right. Anybody's lost? Okay, don't see anybody lost. All right, cool. All right. Let's stop. All right, so now let's be taking this same example. We're still on entry model 1 type. We're gonna do type 1 and type 2 in this area right here. All right. Entry model 1, type 2 in this area right here. All right. So we're just gonna make this, giving an example of it, so that you actually, understand it. All right. I'm sure you guys appreciate the recap as well. All right. All right. Because I guess is like looking at the recording, right? All right, let's move some stuff. Yeah, we're gonna move some stuff here. All right. Anybody like went though before continue? Anybody went and like tried to practice anything that we went over on the call last week? Not a response. Wow, guys, come on, man.
Okay, I can respond. Yes, I practice. I don't have a choice because my app not working.
Still, don't hit me on the side with that, man, because I understand what's going on there. But
All right, Eva, give mommy a minute. But yes, and I would say with more practice, my accuracy will be better, but like 50-50.
Okay, got you. I see Alicia said yeah, she did as well. Anybody else? Anybody else? That's it. I practice marking up the charts. Yes, okay, perfect, Vanette. Anybody else? Shanice, Michelle, Lisa. Anybody else? I did, but not enough. Okay, cool. All right. So, like I said, all right. So we're recapping. All right, we're recapping. All right. So, like I mentioned, right? So remember, entry model 1, type 1, first to the party, right? So here's the first thing. So let me just put back some stuff on the screen so you guys understand and everything. Yeah. So here's the first thing we want to identify, right? Perfect, Shanice. Is the first thing you want to identify. Identify the engulfing candle. Bam. All right. Then we also, as a result, then we can identify the order block, right? Which is then this candle right here. Okay. So the candle that got engulfed will be the order block. Just like we mentioned here, we're just doing it from the opposite side. Okay. So this is your engulfing candle. This is your order block. We're doing it from the sell perspective. Okay. So here, let me zoom in. All right. So here, this is your order block. We're going to take the wick into perspective as well and just mark it out, right? I put a box around it, like a rectangle, see-through see-through rectangle, all right, just to mark the area so that we can see, like what's going on. This is the area that we obviously want to pay attention to, all right? So we're working with the order block, right? Which is that area right here. All right, which is that area right here. So the perspective is price pushed away, and we're looking for price to trail back to the order block for an entry. Okay. So remember, we see this on a higher time frame, we see it on a 1 hour time frame, maybe a 4 hour time frame. Right now, we are on the 1 hour. We can see this trade. Okay. So, but we don't want to enter on a 1 hour time frame. We're going to drop the time frames, right, for our entries. We're looking at the 15, the 5, the 1 minute if you get like really great at your trading, you know, down to the 1 minute. But let's say 15-minute and 5-minute we're going to look at right now. Okay. So 5-minute time frame. We go down to the 5-minute time frame. We see here that this is the trade coming back up to that area. Okay. We can see. All right, just zoom in a little better. All right, we can see price trading back up to this area of interest that we have. All right, see price trading back up to this area of interest that we have. Okay, so let's see what happens real quick. Right, so we see how price, bam, you see right here. All right, price top this area. Now here's a note for you. All right, it may not be like super perfect, right? So you see, for example, that our order block started right here. I mean, well, really and truly, if you look here, we see this candle, you know, down here. So we could include that candle, which basically puts us accurate at that area, right? So this is the entire area right here. Okay. So price literally just tapped that area. Price trade up, bam, tap the area and move, right? We literally just wait that area right there and moved off. So that's what I'm talking about when I say, you know, being first to the party. So a person could have, I do it sometimes, could have entered literally at that point, right? Literally entered at that point, boom, right? And taken the trade, right, for the sell, okay? That's you, again, that's you being first to the party. You just entered, you know, as soon as price reached your order block. It filled in all the imbalance, right? Traded right back up to this order block. And we decided we are going to enter at that point, all right? From there, we're looking to see like what happened. Why is my screen stuck? Nothing is happening. Our player can't be connected. Oh Lord. Let's see what's happening here. One sec. All right. So this is where we were at. All right. This is where we were at. One sec. One sec. One sec. One sec. All right. So price top the area. All right. Price top the area. Boom. And then from here, right? Bam. We just traded off of that area. Right? So that's you. Again, that's you being first. Okay. Price top the area, bam, and dropped. All right. Now, you being second, no, right? You being second to the party, no, is waiting for price, like I said, to break structure, right? You're waiting for price to break structure. So what does that look like, right? Let's break it down like this. So we have price come down, right? We have price sell, boom. Then we have price traded back up like this, all right, bam, right? On, remember, this is on the bigger time frame perspective, and then we're looking for price to continue down, right? So here, this right here is where price dropped, right? Here is where we had price pull back up, all right? And then here is where we're looking for the market to continue down. All right, everybody follow that? Everybody seeing that? All right, making sense? Just let me know in the chat. All right, okay, good, awesome, perfect. All right, good. Now, remember what we said, when we come down on a smaller time frame perspective, it doesn't, this part, right? The pullback doesn't just look like that, right? It looks like this, right? We got the up and down, you know, the up and down movements, right? As we reach the area, okay? Which is this right here is this, okay? This right here is this. We have price trading up, pulling back down, trading up, pulling back down, trading up, pulling back down, all right? So what we want to see here, guys, is if this is the last, right? Remember, every time the market pushes up and down, it creates highs and lows, right? So, for example, this is our low. This then becomes a high, right? Because we're talking about an internal structure at this point. We're talking about the pullback at this point, okay? So that is then our high. So then this becomes here a higher low, right? A higher low. This becomes higher high. This becomes higher low. All right. This becomes higher high. Becomes higher low. This becomes higher high. This becomes your higher low. All right. So for us, obviously, for price, to be seen to continue this pullback, right? We would need to see price come here and create a higher low and then go and create a higher high, right? So the first thing that we want to pay attention to or we want to look for is, bam, we want to see this break, where price breaks this low, right? If price breaks this low now, right, then we want to see this happen, okay? Pull back up, and then we take this sell from this point, all right? Now, this is vitally important. We went through this on the call last week, and I'm going to break it down like this again so that everybody understands why you're doing what you're doing, right? So yes, we see the break, right? And yes, we want to sell from the top. Let's explain exactly why this is happening, right? Here's the thing, guys, all right? The thing about these highs and lows, okay? The thing about these highs and lows, this, all right? This right here is, well, let me put it like this. Although we have highs and lows in the market, we also have strong highs, strong lows, weak highs, and weak lows. Okay? Strong highs and strong lows maintain their structure. Okay, let me put it like that. Strong highs and strong lows maintain their structure. Why? Because it's strong. Right? They hold their position. Let me just put it like that. They hold their position because it's strong. A weak high and a weak low. What do you guys think happens to a weak high and a weak low? Put it in the chat. What do you guys think happens to weak highs and weak lows? It's not a trick question. It's pretty simple. I want you to keep this simple in your mind. What happens to weak highs and weak lows? Okay. They get broken, right? They don't maintain their structure. They're broken, right? Perfect. So understand it. So then here's the question though. It's like, okay, how do I know if it is a strong high or if it is a weak high? Or how do I know it's a weak low or if it's a strong low? All right. Here's how you know. All right. Here's how you know. Remember, weak highs get broken. Strong highs maintain their structure, right? So if this is a strong high, okay, if this is a strong, let me start first. If this is a strong low, right, then it should break the high, okay? If this is a strong low, it should break the previous high. This is what should happen. Boom. If that doesn't happen, that means that this low is weak. If this movement here does not break the previous high, it means this low is a weak low. Remember what we said happens to weak lows? They get broken. All right. So then watch this. So if this is a weak low, this should happen. All right. boom, we break the low. And if we break the low, then tell me, guys, what is this? Is this a strong high or is this a weak high? Is that a strong high or a weak high? Keep it simple. Keep it simple. Keep it simple. It's a strong high. All right? Correct. It's a strong high. Because remember, strong highs, you know it's a strong high if it breaks the low. Right? You know it's a strong low if it breaks the high. All right? So if it doesn't break the low, so if, for example, this happened, this will be considered to be a weak high. So we got a weak high and we got a weak low. All right? That's how consolidation starts to happen. Right? We got a weak high and we got a weak low. That's how consolidation happens, guys. Right? So until we break, like, you don't necessarily know, like, okay, what direction the market is basically going in. So all we want to know is, okay, did this break this low? Right? If it broke this low, it's a strong high. Right? If price came back up now and did like this, boom, is this a strong low or a weak low? Is this a strong low or a weak low? If you listen, I'm telling you, if you understand this, this changes your trading completely. Perfect. Like Chef said, right? Like Kian also said, it's a strong low because it broke the high. Right? This will change the game for you. Trust me. Right? All right. Good. So with that understanding though, right? Not everybody got that covered, right? What is going on with my chart? Uh, uh, oh my gosh. Okay. All right. So with that understanding, we go into this. All right. Let's go to this. This right here, is this a strong height? Right here, is this a strong height? Yes. Okay, good. This is a strong height, right? Is this a strong low? Okay, good. It's not a strong low, all right? Perfect. Is this a strong high? Perfect. All right, good. That means we got it. All right, good, perfect. Now watch this. All right, watch this. Let's take a look at this. All right, I'm gonna come down one more time frame just so we could, like just see it closer. All right. So look at this, guys. Same thing we just said, same thing we just went through. Nothing complicated, right? I want you guys to tell me as we go through, right? So right here, just tell me, strong high or weak high? Strong high or weak high? Think about it. Weak, right? So weak high. We didn't break lows, right? Look, this was the low. Yeah? Everybody, this was the low. This and the high didn't break the low. Okay, so it's a weak high. Remember, we expect weak highs to get broken. All right, what's this? Here. Strong low or weak low? Strong low or weak low?
Strong.
Strong low, right? It's a strong low. The entire move, right? This is the entire move right here. All right. If for example, like we came and saw it at this point, yeah, you will probably be able to say, okay, well, it's a weak low because it didn't break the high as yet, but the entire move, it broke the high. All right. The entire move broke the high. This was the entire move right here. All right.
Okay.
So this was a strong low. All right.
Okay.
Here.
Okay.
Hey.
Before you go on,
Mm-hmm.
because I put weak because I see
Mm-hmm.
that it's strong because I can see the entire movement. But if I'm
Right.
looking at the chart and the move hasn't happened yet,
Mm-hmm.
for me that would have been weak. So how do you know? Well, do you know when the move ends? If you get what I mean.
Yeah, that's where, remember, trading is always a risk still. Right. So you never you're not going to be, remember, we will never be 100% on anything. Right.
Right. I get you. It's just I'm just saying, like for me, I answered that based like as though it was
Just up to this point.
correct.
Yeah,
Because
which I
that
understand,
would great.
which is what I mentioned. If this didn't happen as yet, right, then it would be valid to say that this would be a weak low. Right? It would be valid to say that. Right? But seeing that this happened, definitely is a strong low. Right? So here again, guys, strong high or strong or weak high? Strong high or weak high? Perfect. Right? Now watch this, right? As you guys like say this, answer these questions, I want this to be engraved in your mind. All right? Let me see. You guys can see me? Hey, I want to make sure y'all can see me. Right? Um, let me see. Y'all can see me? Y'all can see me? I can't see me, so let me see.
Yeah, we can see. I can see you.
Oh, okay. All right, cool. I said I can't see me. All right, cool. All right. Listen, I want this to be engraved in your minds, right? That's why I'm asking you these questions as I go through it, so that it sticks, right? So that it makes sense, right? So as I recap it, I'm recapping it so that at the same time, it's like you going over this recording, right? So that this sticks into your mind and it's not just information, right? Because once you understand this, I am telling you, trust me when I tell you, this could change things for you significantly. All right. You stay connected. I'm telling you, this could change things for you significantly, right? Because make it make sense now, right? This is this is a weak high. What does that mean? That it means that the market then should continue to go up. Correct? The market should continue to go up, right? So our pullback is not finished. Everybody follow? Our pullback is not finished, right? So okay, because this didn't go ahead and break this low, then price should continue to go up, right? So our pullback is still happening, right? Our pullback is still happening, right? When price breaks, boom, right? We took the high, phenomenal. So now we got a strong low, right? So we know that price ain't going back down yet. Okay, we got a strong low. Okay, bam. Then we got a strong weak high, strong low. Boom. Price broke the low, broke the high. We came up here now, right? Right here. All right, right here. Bam. This now, tell me, strong high or weak high? Strong high or weak high? That's why I want you to go through your charts, right? Seeing it as much as possible. Strong high or a weak high? Why is it a strong high? Somebody tell me. Is it a strong high? Tell me here, guys. It's a weak high, right? Don't listen. Don't forget the reasoning. The reasoning is it's only strong if it breaks a low. Yeah, you see, this is what happens, right? You gotta remember the principle. You gotta remember the principle. A high or a low is only strong if it breaks a high or a low. Right? So this high weak. Because it didn't break no low. This was the low. If this broke that low, it would be a strong high. All right. This is where we're gonna stick up to everybody understand it. All right. It will only be strong if it breaks a low. Right? My high can't be strong if it didn't break my low. My low can't be strong if it didn't break my high. If it breaks my high or if it breaks my low, it's strong. Otherwise, it's considered to be weak. Right? So then here, for example, right here, bam, and price pushes up now, right? It's like there's a reason why this created a higher point right here. All right. Price created a higher point right here. Bam. Yeah. So again, that could be in our first entry area, which is what we spoke about, right? Price trading into the order block. Boom, it would have been low risky, but you are in the trade at this point. Okay, low risky at this point. If we don't take that setup, which is fine, right? What would we want to see? Because no, remember, our bias is that we are looking for the sells, right? Our bias is that we are looking for the sell. So if I am going to sell this, what do I need to see? Talk to me. We went through it with the lines. If I'm going to sell this, what do I need to see happen? Okay, perfect. All right. So you can get fancy and
Strong
you
low.
call it. Go again. So yeah, like I said, right? The low has to be broken. Correct. Right? The low has to be broken if we are going to sell this, right? So, like Alicia said as well, right? Same thing. It's a change of character, right? So that's what it's called. That's the the official name. A change of character basically has to happen, right? But for this scenario, like to keep it very, 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 very simple, make sure everybody understands. We need the low to be broken because no, when the low is broken, right? When this law is broken, what does that say about this high right here that was created? What does that say about this high? Strong.
Say that is weak.
Nah, the high is strong. Remember, right? If that law get broken, the high is strong now. Right? It's a strong high because the low is broken, correct? Right? The high is strong because it breaks the low, right? So now it's like, okay, boom, this maintains, boom, pushes through this low. So we got a strong high at this point. So, so compute now, what does it say overall? It says the likelihood of this trade going back up, passing this high is very unlikely. It's not impossible, but it's unlikely. Why? Because this high is strong. All right? The high is strong. Everybody following? All right. So this is the type 2, right? So I showed you type 1, right? If you got your notes. Type 2, this is second to the party now, right? We get a more solid entry. Why do we consider it a more solid entry? Simply because we established that the high is strong. Right? It's a solid entry now because here, like we didn't have anything really to go on, to say, well, yeah, okay, well, enter at this point. We just got the order block, right? In terms of a structural standpoint, like we don't know for sure if this is going to hold or not, because this could have happened, right? And it happens to me sometimes, you know, like when I take trades, you know, on the first entry, and this is what you will see, you know, it just pays to be more patient. Like if I take a trade here, all right, price could come right here, right, into this order block right here, and it could do like this. All right. Like there's valid reason for that to happen. All right, because we don't know if it's a strong high or not. All right. But when you see, so you see how price literally, you see how price came like this right here, like right in this area, and reacted here, pushed back up. But then afterwards it pushed right back down, right? And then it came up and then it pushed down again. This confirmed no, this high is strong. Right? I hope you guys following me now at this point. Right? I hope you following. Okay? Because that confirmed that this high is strong. All right. So that's why trading is a risk, right? Trading is a risk and it requires patience. The more confirmations you have, the better it is for you. Okay. So correct. So now watch this, all right? So we got the break, right? Just like we went through, we get the break. Bam. This is the break. Right? Here, look, price broke through. Phenomenal. Now we want to get the pullback, right? So price broke through. We see how price did like this, right? So we got the I'm gonna mimic the same thing right here. This is this. This is this. This becomes this. This becomes this. Here. All right. And then this becomes this. And then this is this. You guys see that? Oh, listen, you can't get no simpler than this, right? You guys see this? You guys see this? All right. You make it look so easy, right? But listen, right? Listen. Here's the unfortunate part about this. All right. Here's the unfortunate part about this. Nobody taught me this. Like I had to catch this. Right. So what that means is that nobody's teaching this. Right. I had to catch this. Right. I mean, I've seen it in more complex terms, right? But it never clicked until I showed myself. Actually, I was on a call with you guys, right? Until I showed you this from a week high, week low standpoint, like that's when things went off in my mind, to be quite honest with you guys, right? And that was about 3 weeks ago, right? Or 4 weeks ago, something like that. That's when things went off my mind. So when you said I make it look so easy, like because at this point right now, it is that easy, right? It that I laugh it, right? Because every time I go through this, I be like, bruh, why did nobody show me this like this? Right? Like, why did nobody show me this like this? Exactly, Seth. Right? You know, and that's why I like to teach, right? Because it unlocks things in my mind, you know, further every time, you know, like you're going through it more. And like, yo, this is crazy, right? And y'all getting this. I'm telling you, like, this is information. I'm telling you, I would charge thousands of dollars for because like, bruh, this this is some stuff that I had to catch, all right? And it was a caught, it was a taught, right? But anyway, we here, right? So watch this. Here's what happens. You're most welcome, right? You are most welcome. Yeah. Yeah, I appreciate the gratitude for real, because I'm telling you. All right. So watch this here, right? So now you get price broken, right? We got price break the low. Bye. Okay, great. Here's what you want to do at this point. The same thing you did at this point. Like, guys, listen. Don't complicate it, no, right? We know that price going down. Now you want to know where to enter, right? The same way, right? We look for this entry. We're looking for an entry here. right? We're looking for an entry here. So somebody tell me, what are you looking for then? Now that price is broken, what are you looking for? You tell me. I want you to tell me. Now that price, this is gonna help me to understand that you understand what I'm saying, right? Jeez, on, right? Seth. Okay, all right. You're looking for order block, all right? The same thing. Listen, it is the same. You copy and pasting the same thing, guys, right? Just on a smaller time frame now. That's it, All right, that's it. You copy and paste the same thing. Like y'all, you guys understand that? Right? I don't want only Steph to catch it. Let me know you guys catch that. All right, let me know you caught that. So the same thing that we look to sell on initially, right? Which was this order block up here. When price came back up, all the niceness, all the nice pullbacks, etc. Oh Lord. Right? All this happening, bum, bum, bum. We're looking for this same thing here again on a smaller time frame, right? This same thing, like this. Let me go back. Let me go back. Let me go back. Where is it? Where is it? Where is it? Here. Right? Here. See this? Where we enter from. We're looking for entries on the order block. Right? Bang. We're looking for this same thing again, this same thing again, this same thing again, just on a smaller time frame perspective. That's all. Right? We always entering from order block. Right? We always entering from order block. Right? So when we go on a 15-minute or the 5-minute time frame perspective, right? It's the same thing that we're looking for. So when we look here, no, right? Look at this. See this right here? Oh, we got the order block right here. Look, bam. Right? So we're looking for entries in that same, you see the same area right here. And it's changing, right? Same thing, smaller time frame perspective. But I want you guys to write this down, right? The higher the time frame, the stronger the confirmation. Right? The higher the time frame, the stronger the confirmation. Right? Ideally, all right? Ideally, you want to enter on the 15-minute time frame. The 5-minute gives you an earlier entry, but it may not be as strong confirmation, right? It doesn't make it strong. It's just not as strong as a 5-minute, as a 15-minute, sorry. The 5-minute entry is not as strong as a 15-minute entry, right? But it gives you an earlier entry into the market, right? So obviously, smaller the time frame, you get an earlier entry, but it obviously involves a little bit more risk. Yeah, that's just how it is, right? That's just how it is. You can't have the best of both worlds, right? So it reduces your risk, number one, because you enter on the 5-minute. You get an earlier entry, number two. But the downside is that it may not be as strong a confirmation as a 15-minute entry. Okay. So it's in the same light, you can enter the market on a 1-hour time frame. It is a stronger confirmation, but you get a later entry, which also increases the risk. You guys following? Everybody follow that? That's when we enter on smaller time frames. Okay, perfect. That's that. All right. Good. All right, so this is what happened. If you look here, you see price push down, boom, traded back up into the order block, dropped again, right? If you were on the 15-minute time frame, you would not have seen that. All right. Like, quite frankly, you wouldn't have seen that to enter that trade. All right. Price would have just dropped. Like, you wouldn't have seen that. Okay. You would have got this push back up right here. You wouldn't have seen that. right? You just see price push back up at this point, and you would have got an entry later on, which we're gonna talk about. We got 7 minutes, right? Which we're gonna talk about. So we see price push down, traded, came back up. You can see it here. All right. So the 5 minutes. So if you missed it, for example, if you missed it here, you got the opportunity, see here, straight into the order block. Bam. At this point, here, and then it dropped. All right. Just shift that. So you see here, price came all the way down, right? Push down into the order block here, bam, and then push down, bam. Right? Everybody see that? Now here's the upside to this, to all of this, right? We can target, person asked me about targeting trades and so forth, right? Like exits, how to get out of the market. We can target this low. Tell me why. I want you guys to tell me. Why can we target this low? Why can we target, like, why is our take profit down here? Don't complicate it. No. Don't complicate it. Don't complicate it. Keep it simple. Keep it simple. No. Why can we target here? Keep it simple. Keep it simple. What are we talking about all the time? Why can we target here? Why did we target here? Because it was not broken. Like, what does that mean? Talk to me. Why would we want a strong load to be broken? Talk to me. Like, explain, expand. Like, what would we want? It's a strong load. Why would you want that? How can that even be broken? Like, talk to me here. Like, help me out, guys. I want you to make sense of the situation. Aha! Look at what Damien said. All right? Look at what Damien said. That was a weak low. All right? That was a weak low. Watch this, all right? This is very, very important now. This is where now, I don't want to confuse you, but you gotta know, right? You gotta know. 1 hour perspective, this is a weak low. Why? Tell me why. Why is this, like here, you can see it now, all right? And the 1 hour, we could see this is a weak low because here, all right, watch this. This was the high on the 1 hour, all right? This was the high on the 1 hour. This became a low on the 1 hour. Price came up here. Did it break the high? Did price break this high? No. So what does that make the low? What does that make the low? Strong low or weak low? It's a weak low, guys. It's a weak low, right? So remember, we analyze on the bigger time frame perspective so that we know, like, okay, this is where I'm at and this is where I'm going. But how do I actually get there? Right? It's like a GPS, right? You put in the location, right? Boom, boom, you get the location goes in. Bam, you see, okay, destination is 26 minutes away. This is where it is, right? When you press start, then it does like this and zooms in to where you currently are. That is what we're doing, right? Because now we got the location, we map it out. We say, all right, this is a weak low. Let's target these lows, right? This is a weak low. Price didn't break the high. Let's target the lows, right? So we targeting the lows. Now we want to figure out, all right, what's the roadmap now to actually get there? Let's drop the time frames. Guys got it? Guys got it? Yeah. So now you know how to target as well. All right? You target now as well at the same way because now look, Bam. Price bust the low, right? Price bust the low. So we know, boom, strong high. All right, we know these are strong highs. All right, this is the quote unquote lower high that created the low. All right, price traded through that. So price should not come back up and break this high. All right, price should not come back up and break this high. So even if we get an entry, we do the same thing again, right? Same kind of perspective. No, or the block. All right. You can take an entry off the order block, bam. Right? As an example, stop above, right? And you should be good, right? And we could target. Okay, if price comes back up. All right, bam. You see price trade in, all right? And you push off again. Yeah, price trade into the area, bam. We going again. All right, price shouldn't break the high. Price breaks the high, right? Then we know we're going up, right? So that's how, again, and we move with the same type of perspective over and over and over and over again, right? Over and over and over again. So I wanted to jump into more stuff, but I think it's good that we recapped, all right? I think it's good that we recap. How many of you like you're glad for the recap rather than moving on? I need to recap for sure. Then me, I most certainly I want me because I don't want to make sure nobody feel like man, I don't want to move on. Right? I don't want to get the rest. Glad for the cat. Need to hear it says again. It's a cat for me. It's a cat. ah, perfect, man. Well, I'm glad that it made sense. But you can see, literally, you see how it played out. Right? You see how this played out. And then when we get in now to the second entry model, you will see how, for example, that we got this entry. All right, you see how we got this entry right here. Okay, you see how this entry came into play. I'll show you guys, different entry models. All right, because then that's how you'll be able to like get more opportunities in the market. All right, that's how you get more opportunities in the market. So I'll show like for example, like even more recent trades that we took. Like y'all should be able to look at this now and tell me like why these entries, like were given. I guess that's the best way to put it. Let me see. Let me give you a simple one like this right here. You should be able to look at this and tell me, oh Lord, where you going? This entry right here. All right. This entry right here. Wow. I guess. I too am getting challenges with the outside to use the manager branch of the business of the company else and okay, cool. And you're gonna get you started too. All right. Let me that one. Let's use this. Look at this. This is perfect. All right. Y'all see this? See literally what we talk about. Boom, move up, pull back down, right? We could have entered, remember I said, right? if you enter on the first move, is more risky, right? Whereas like price could trade back into this area and we can say, all right, yeah, bam, enter, right? But look what happened, right? Y'all see how price did like this, boom, and dip a little lower, right? I would hit the stop loss, right? So waiting for type 2, which is being second to the party now, what we got? Bam, price push up, all right? I got the order block here, all right? And bam, price traded back into the order block, bam, gone. See that? So simple it could be. All right. It just requires a little bit more patience. All right. Requires a little bit more patience. And I think I said it on the call last week. You know, that you gotta know you as well. All right. Is why trade gold, because gold requires less patience than some of these other pairs. Right? Because sometimes like, yo, I'd be like, my goodness, all right. Let me give you an example. Today, this was the gold trade. I took both of these entries on the center one, all right? So I took this entry right here. This was much earlier. I think it was actually late, right, in the night. That was like a 150 pip move up, right? And again, this morning, bam, we pushed up just about 100, just over 100 pips as well, right? In that time, like I remember when I took this trade in ZD/USD was sent out last night, right? And the entry on it was like, I think 108. I think it was like 108, something like that, right? The time that it took gold to hit 200, 100 plus pips twice, so 200 pips, NZD/USD did a 17 pip move. Sure, no problem. All right. But NZD/USD did a 17 pip move. You guys following? Like you see the kind of patience, like this was the time that goal was moving 100 plus pips. All right. I'd be like, bruh, oh my gosh. Like up and down 12, 14 pips. Up and down 14 pips. It's like, oh Lord. Oh boy. All right. So I can't, you know, this we're gonna know you, right? My patience level ain't that high, you know. So I want it to happen. Like, either happen or don't happen, right? But again, same models apply, you know, to be quite honest, right? Like if your chart is like this, you can't really see anything. So make sure like, you know, like you zoom in a little bit so that you can actually see the chart movements, right? So same thing applies. You got lows, like this was a previous height, right? So you want to see that height basically taken. Once that height is taken, then you know, okay, good. All right, you know, like, well, we just call this right here, take this right up. We have another 15-minute time frame. As the high is the low, all right? This becomes your low here. All right, price will wait through it. Didn't really close or anything, so you still gotta hold that. All right, so that'd be your high. This be your low, boom, created a higher high at this point. All right, and you basically like we see how it traded up from there. All right, price a bit below. Yeah, price a bit below. We will talk about this next time for sure. Trade it into some imbalance down here, and then continue up. But the same principles right across the board apply. All right, it doesn't matter the pair. You know, that's why
Can
like
I ask a question, please?
sure.
All right, right. Because I don't mention in the chat about the limit, right? I was looking back at a trade where it was saying the same sell limit or whatever the case may be, and they had a take profit one. And when I look back at the trade, it should have hit the take profit one because the trade actually passed those numbers. And it didn't register. So why would that happen then if it reaches a certain point and it passes that point? Why?
Yeah, because basically, like if a trade, okay, let's use this as an example, just real quick. Let's say, bam, All right, let's say I go to this trade and I say, okay, I want to enter this at this order block. I set a sell limit here, put my stop loss here, and my take profit 1 is at this line down here. This is where my take profit is at. All right. For this trade, obviously now to be considered active, I need this to come back up here first. It enters me into the trade, and then I'm looking for this to happen. All right. So let's see what happens in this case. Bam. Price didn't come back up. All right. So basically what happens with a sell limit is that if the limit is not activated and price goes on to hit your take profits, like you could see price, like pass the take profit price, but nothing is happening for you because the price never reached the entry basically. All right. I mean, if that makes sense.
Yes, please. Yes, please.
All right. So that's basically how limits so forth work. All right, it's a pending order. So the trade, unlike like just sells or buys, where it's instant. All right, sell limits, buy limits. Those things are pending orders. All right, so that's how limits work. So, anybody got any questions? I think next week we would go into entry model 2. Right?